Okay, we
Do you
need
want
to
to switch
switch.
it?
We need to switch.
Oh, my
I
apologies.
took your seat. My
Yeah, no problem.
apologies.
My apologies. Thank you. Kristalina, thank you for those remarks, capturing the moment that we are all witnessing so well. And I wanted to start by asking you to give us some perspective, because you have witnessed and participated in various crises before and slowdowns before. How does this moment in time compare to what you've seen in the past?
Thank you, Maria. It's a very good question. What we see this time around is a very sharp increase in uncertainty. But the economic fundamentals are still quite strong. This is why when I spoke about what you should expect from us next week, I stressed there would be markdowns but not recession. We, of course, know from experience that the longer uncertainty goes, the more likely it is to have negative impact on growth. So the more we can advance in clarity, remove this uncertainty, the better. But what we see is the real economy is functioning. Labor markets are still quite strong. Very important, and we have to reflect on that. The financial system is holding despite all the nervousness. Why? Because after the global financial crisis, a lot has been done to build strength exactly for moments like this. And to me, the moral of the story is how can we be agile in learning from each and every experience so we do better next time around.
You know, you make such an important point here. We've got all of this uncertainty, and markets are trading on this uncertainty. And yet you're focused on the fundamentals. And you're looking at stability, really, at the fundamentals. And you just said you're not expecting a recession. Why do you think so many people are expecting a recession right now and contraction when you're looking at fundamentals which are growing?
Well, first, we do recognize that this has been a fairly significant change in economic conditions. Second, I believe there is an expectation to see policy pivots in other areas that would be more conducive to strengthening the growth fundamentals, like deregulation and what would be the tax regime. So I think the more we can look more comprehensively into the economy, the better we will be. You're asking me why people are predicting a recession. Maybe these are people who have not been in the ups and downs before enough. Maybe they are more on the kind of getting panicked quickly side. But it is important to reduce whatever feeds into this perception quickly. Because one thing I learned through crisis periods is that perceptions matter as much as reality. The reality may be great, but if perceptions change negatively, that can be quite detrimental to the performance of the economy. So let's move perceptions up.
Where do you see the growth in the world today? You mentioned that you are expecting a slowdown, but still growth. So talk to us about the world and where specifically you're expecting growth.
Well, not surprisingly, countries that brave to take on tough reforms and move forward perform better. I mentioned Argentina, Last year, Argentina was, growth was in negative territory, inflation was through the roof, poverty was growing up. The country got its fiscal conditions in hand. The administration is moving in a very disciplined, robust manner with reforms, and where we are today, growth projections for Argentina for this year, 5%. They may get trimmed down a little by the global environment, but from recession to 5%, inflation from double digits to single digit on a monthly basis, low single digits. And most importantly, poverty from 50% down to under 40%, still very high, but trending down, and the people support the government. Why? Because they see discipline, commitment, acting on promises. India, a country, by the way, very interesting in the context of the discussion we have around trade, a country that for quite some time was uneasy with reducing tariff and non-tariff barriers. India is now doing it, and in addition to what India is doing in digitalization, in creating environment for private sector investment, this decision to remove some of the barriers, self-inflicted injuries to growth, very good, very healthy for the economy. We see in Ukraine, a warm, torn country, the government is implementing reforms. So when there is that will to do what is tough, but healthy for the economy, and fundamentally, when the power of businesses to create jobs and bring growth up is unleashed, good things happen.
And the IMF recently announced a program for Argentina. Tell us about the IMF and what function you're leading here and its impact on the world.
Well, this is a wonderful organization. It has the very best people working for it. But on a serious note, the IMF is really a great stabilizer and supporter of reforms in the world, openness of economies. First, we are the institution that can rescue countries in trouble. And we can come fast with substantial financial support, leveraging contributions from others. Second, we are a very unique funding model. My gratitude to our founders for inventing it, because we don't ask taxpayers for money. We operate like a savings account. So countries put money at the fund, we lend, this is your money, and then we pay back with interest. The United States in the last 2 years got $3.1 billion in interest payments for the money we lent to countries in need. And three, we have been built on the foundation of good policies, especially policies that open up space for creativity, for innovation, for private sector flows. And I can say the United States, our largest member, 17.4%. I mean, people don't realize that how big the US is at the fund. The next biggest is Japan, 6.5. It has been a very important partner and kind of a force for the discipline in how we work. The foundation for the good work of the fund is the fact that we are the only institution that takes the pulse on every economy every year. And then we collect this information, where our countries are going. We collect it, and that gives a picture of where the world is headed. That is very valuable for all our members.
Thank you for that. That's very important to understand. President Trump seems to have shaken things up with his tariff plan. And that has been the focus largely of markets and certainly leaders across the world as he negotiates trade deals. But there's a broader plan of the US's agenda. President Trump talked about extending tax cuts, deregulation. And when we were in Davos earlier this year, I know it was all about deregulation. There was so much conversation that Europe should be deregulating. How significant is the rest of the agenda? As everyone focuses on tariffs, tell us your assessment of the other things in the agenda and how important they will be.
Well, they are very important, and when we were in Davos and when we looked into the year, the expectation for a very strong, very robust performance of U.S. came on the basis of that multiple elements of the policy agenda. So moving forward to give businesses the fertile environment to succeed is going to, of course, be very valuable for the US. And because the US is so significant for the world, it will be very valuable for the world. A strong US economy is a stabilizer for the rest of the global economy. We see of course, when you move in a direction of deregulation, it is very important to do it properly. So I actually appreciate that the administration is not rushing. It's taking its time to think it through, because you don't want to deregulate in a way that creates vulnerabilities, for example, in the financial sector. So that kind of careful, prudent approach is one that would be very, very helpful. But it is good to see these elements of the pro-growth agenda moving forward.
And at the center of this, it seems the two largest economies are at odds, the United States and China. How worried are you, or are you concerned, that there seems to be a soft economic war escalating between the United States and China?
What we see is on both sides, there are some grievances. In the US, there are grievances around trade practices of China. There are grievances around intellectual property rights, non-tariff, tariff barriers. We see China asking for an engagement with US in which the two sides would be placed in a good footing. We would like to see reduction in uncertainty, and it is hard to get there if the two largest economies are still finding their footing. And when obviously from the perspective of the world economy, it is important that the result of all this is a fairer rule-based system. So I showed a graph on how tariffs were going down, but never reached the level of the United States, and then they stalled. Well, we have to see progress from the rest of the world as well, so we can come to a point in which differences are addressed and resolved. Maria, I lived on the other side of the Iron Curtain during the Cold War. And what I can tell you, two things. One, it was really cold. It was not a happy place. But also that it creates damage to everybody. You get part of the world that is excluded from the movement of capital. Opportunities for businesses are reduced. And of course, we have to think about long-term growth prospects, that they require more opportunities for everybody, not less.
It's incredible context from you, given that you lived within communism. and can actually look back and understand clearly the impact. It sounds to me that you are approaching what's happening right now with a calm head. You've seen this before. It doesn't appear that you're very concerned. Sure, you're expecting slowdown, but not recession. Is that correct?
This is exactly what we see. We see a slowdown. We see, again, I want to repeat, my main message is get uncertainty down so businesses and consumers can plan. And when we do that, we would see very positive impact for the economy.
It's good to know that we just need some clarity to actually calm things down.
We do. I mean, we are, it is a interesting point that something that has been built up for a long time, it didn't happen in one day, it has been built over time, came to this inflection point. And how we come out of it has to be done, as you said, calmly, with a decisiveness. We want the best for our businesses. We want the best for our people.
And you led with the word trust. We need to trust. I know that we have some questions from the audience that we can begin. Yes, sir.
We start great things. Let me echo the point that this is a critically important institution. We're fortunate that it exists, and this is the best and the brightest in the world right here. So we're glad you're here. We're glad that you do what you do. Maria, let me play on some of your questions and your concluding remark. And that is, there's no doubt that the shocks of the last couple of months have been harrowing for many in the markets. There's a lot of doom scrolling. There's a lot of catastrophizing going on. I've probably done my share of it. But are there some silver linings? Might we see, as you alluded to, out of the U.S. reforms that can address the imbalances that we've been talking about for 20 years, that can improve productivity? Could we see an acceleration of reforms in Europe that will lead to faster growth and, again, higher productivity? The mood music in Europe is so much better than it was 2 years ago. And could we possibly see these trade negotiations, I'm not a fan of tariffs, but these trade negotiations actually produce a reduction in tariffs, reciprocity, and non-tariff barriers, again you alluded to, so that we're actually better off?
Of course, this is possible. And actually, sometimes you need to be in that kind of shock to see that the way that you take forward, you brave to do things that you thought were not possible. I want to give you 3 examples. One is Germany and the debt break. Germany, for a long time, recognized that they were inflicting on themselves and the rest of Europe restriction in fiscal capacity. Because of it, they took a brave decision that is very good for Europe. And this decision was accelerated because of the need to strengthen Europe's position. And I really hope Europe would take this moment to get all the unfinished business on the single market finished. Second example, you look at the graph I showed on trade barriers and non-trade barriers. Well, in injecting this moment, yes, it is bilateral discussions, but I expect this to lead to some action around reducing, eliminating barriers that could have broader benefit for the world. And 3 countries that should have traded with each other more are now going to be pushed to do it. Take the African continent. I mean, what is this? You go from one country to Paris to get to another country that is your neighbor. That forcing countries, forcing regions to find more opportunities that are there for them to grab. I think it is going to come. And I think that it is going to be, Tim, it's going to be very likely a bit messier. Of course, it is easier to have one global trade agreement and everybody plays by its rules. The problem is that it hasn't quite acted with teeth to really get everybody to perform. So we would see, we're likely to see more bilateral, plurilateral agreements coming. And maybe they would add some additional vibrancy. And also there is the thing that we don't know. Every time when you have a shock, something positive gets unleashed that you have not even thought about. Well, I am kind of hopeful to see that happening.
Kristalina, you said that we likely won't see a recession, but are you worried about a spike of inflation later in the year, or do you think the rest of the agenda that we're talking about, tax cuts and deregulation, will limit the spike?
So that's a very interesting question. Where are the organizers? Can we please have an additional hour, Maria and I, here?
I'm sorry.
Look, I mean, it's gonna. We lived in the luxury world where monetary policy was all the same for everybody. After COVID, everybody did the same thing: monetary policy, accommodation, bring more financing. Then came the shock of inflation. Interest rates had to jump up. Everybody did the same thing, tightened up. Now we are in a place where it's not going to be the same thing for everybody. You would have where it is more of a supply shock. In other words, fewer goods, more expensive goods, that may push inflation up. But on the other hand, if people are scared of spending, they keep their money in their pockets, that would push inflation down. So I think it would be important to watch it carefully. We do not see in either direction a big swing. But we do see a little bit of slowdown in the disinflation process in some countries. We also see where the economy is more affected and weakening, then you need to cut. So
yes, central banks have a role. And
central banks have a role. They have to watch carefully what is happening around them, and they have to not fall behind the curve, neither rush to something. You saw the European Central Bank cut. You know, in their case, it is kind of impacting their economy shock, a slowdown shock. They risk to see an increase in cheap goods coming from other places, which means that they're going to have disinflationary pressures. So, chop.
And that's what we saw today. Yes, sir.
Gary Littman, U.S. Chamber of Commerce. Madam Managing Director, thank you for highlighting the importance of trade. If the dust settles and the tariffs remain higher than they used to be, how will that impact the longer-term growth potential of different economies, and how is the fund preparing to address the new normal, if you will, with higher tariffs around the world?
So first, we are not prejudging where tariffs would land, because we think it's something that we need to watch carefully. There may be some places where actually the direction is to bring tariffs down. I mentioned India as one example. And second, we think of growth drivers, potential growth in a more comprehensive manner. And actually, one thing that pains me is that before this focus on tariff came, we were all talking about artificial intelligence, how it is going to increase productivity, competition, how important it is, removing barriers for private initiative, how important this is. And now we forgot about that part. And actually, when we are here next week for our global debate, we will try to bring back this focus pro-growth policies, structural reforms that are supportive of growth. Back to your point, you want to be stronger, well, get your house in order.
And part of that is cutting debt. Are you concerned about the level of debt right now in the United States?
I mean, the United States is a very interesting story from the perspective of tracking financial flows. Before the pandemics, the total assets here, equity and debt in the United States, was 38% of GDP. Today, it is 72% of GDP. Wow. Very big jump. And the big jump came primarily from the equity side. Investors saying, we see this is an innovation, dynamic economy, we want to be here. We believe that actually getting to some moderation, both on the debt side, but also in how the US deals with financial flows on the equity side. This is something that is not bad, because 72% of GDP means that people are putting their money in the same place. How much is enough? And then it also means that for the rest of the world, access to capital gets more restricted. We are not among those who say, you know, the debt situation in the United States is not sustainable. No, we don't say that. But again, you look at your financials and you say, how much exposure do I want to have to my savers and to the rest of the world? And how do we balance that better for our own long-term interest?
Managing Director, we are grateful to have your steady hand and your calm approach during this moment of stress. Thank you, Kristalina.
Thank you. Thank you, Maria. Thank you. Well, many thanks to the audience. And please do come on Tuesday to listen to our chief economist. He will have much more interesting stuff to tell you.
We look forward to that.
Yeah,
thank you so much.
Thank you.